Hello everybody and welcome to the Cyclical Investors Club YouTube channel. In this video, I'm going to review some of the buy, sell, hold suggestions I've had over the years, especially since relaunching the channel exactly 1 year ago today on October 1st, 2023. So with those, I'll mostly be looking at the stocks I've suggested buying over the past year, but I did also have a series of videos in early 2021 where I would talk about a stock I thought was worth buying, one that I would just avoid for one reason or another, and then one I would sell based on valuation. And so I'll briefly look at those older ones as well and see kind of how they've done. But mostly it will be about the newer suggestions that I've had. And I'm going to try to do one of these updates like every quarter. So I did one last quarter. And I'm going to try to come in each quarter so we can just get an idea how things are going, and I can maybe comment on them. Sometimes I ask people ask me to do follow-ups on videos in the past, and sometimes I do a full follow-up, but other times I can just say a few words and that's all I really have to say. So I can do that for some of the ones that I've suggested buying. I also have a pretty big announcement today. I have a new tier level on Patreon, and it's just $25 a month. And what I'm doing there is a weekly pick or weekly idea, which I think is the best medium or long term. We're talking like 2 to 5 years is kind of the typical time frame in mind, or longer. Whatever the best relative value I can find in the market that week is what I will share. So if you in the full CIC, I have like a full portfolio. I have all the spreadsheets you can go and use yourself. And I have like cash. I track cash levels as well. So the cash drag gets accounted for, because I think too many people on the internet making stock picks don't account for like cash drag, which would be in like a real portfolio. And when the market falls, they magically get new cash. I always hated that when I would read people, so I vowed never to do that. So I'm not really doing that, but I am in some ways, because the point of the new weekly picks is for folks that are just like dollar cost averaging, like they don't really care about, and they're not close to retirement. They don't really care about like holding cash, because they have new money that's coming in that's maybe even much more than their relative to their portfolio value. So what's more important to them is just finding the best place that they can put that money at the time. And so that's one group of people. I think the new weekly picks kind of service will help. And then another is folks who have like a lump sum. Maybe they cash out the 401k because they moved to a different employer. Maybe they inherited some money. Maybe they sold their house or something. I mean, there's all kinds of ways you can get kind of a lump sum of money that you would like to invest, but you don't want to necessarily like put it all at risk all at once, or maybe you're just learning about investing, you don't feel comfortable doing that. The other way to think about this is to put like half of that in like treasuries, half in like an equal weighted S&P 500 fund. So you're not making like a big bet the market will go higher or lower, but it's still invested. And then to slowly move the money from that allocation, kind of taking from one each of those positions at a time, and putting it into individual stocks, so you can learn about investing with real investments, but investments that aren't like one big chunk. Like everything's not just, you're not gambling on the roulette table and putting it all on black or something. So I'm going to track the performance of these weekly ideas using both of those two methods, so we can kind of see how they work. And then it will be an unconcentrated portfolio, so there'll be 0.5% portfolio positions. So ultimately there'll be 200 positions, and no one pick will be picked more than 4 times. So 2% will be the maximum initial weighting of a position. And then I'm going to invest my wife's Roth IRA money pretty much exactly how each pick will be similar. As more money goes in, it will get invested each week. in the manner that the weekly picks go about. And then when there's eventually sells, either because something is wrong or something, or a thesis has worked itself out, or a stock gets too expensive or something like that, those will be discussed as well, and we'll track the results of those. So make sure to check that out over on Patreon. If you're just interested in it, there is a free tier over on Patreon that you can join if you want to kind of slowly, learn more about what I'm doing. But each week, unless I'm on vacation or something, and I'll make up for those, I'll have a new pick. I'm going to aim for Wednesdays on most weeks, I think, and we'll see how that works. So that is available in the links down in the description. Okay, enough with my pitch. So back in 2021, I had a group of stocks. I did this for like 2 or 3 months, and they're still on the channel if you want to go back and look at them. And here are the dates that they came out. And I was like, for one reason or another, I thought these stocks should be avoided. So all this little spreadsheet does is show the return since then compared to the S&P 500. I didn't update all the dividends for these because the gaps are so huge. I didn't bother doing it. When I get to my last spreadsheet, I did do that. So overall, the avoids over the past almost 3 years, it's almost 4 years now, earned about 29%, but the S&P 500 earned 54% over the same time period. So they lagged on average 25% on average. They lost to the S&P 500. Wells Fargo and IBM look like they did the best. IBM's kind of turning things around a little bit, it seems like. The Wells Fargo thing, I think, is probably overdone, but we'll see as time goes on. Tesla has lost money since then. Carnival has lost money since then. Ben Franklin, if I added in the dividends, this would probably be about flat, honestly. But those have massively underperformed the S&P 500. So overall, as a group, I think the avoid suggestions were solid. Now the sell suggestions were good companies, but based on valuation, I thought they should be sold. These have only performed flat in the past nearly 4 years, while the S&P 500 is up 50%, so they've underperformed by more than 50%. I actually own PayPal now because I bought it after it fell. Disney down 50%, Estee Lauder 60%, Nike. And again, these are not like companies nobody's heard of, right? These aren't like microcaps or, Chinese tech companies or something. These are all in the S&P 500. They're all well-known companies. So I think and Apple and Pentair and Intuitive Surgical have outperformed a little bit. I think they're all still pretty expensive, but overall, those gains have not been enough to offset the losses. So I definitely think I did a great job on these to pick companies that everybody knows, that everybody kind of thought I was crazy for talking about at the time, like Disney, PayPal, Estee Lauder, and Nike, who have had horrible returns since then. So I think those sells were good calls. Now let's get into the buys. So these are the buys that I've still owned, and I've also added, we added, I think, 9 since I relaunched the channel 1 year ago today. Now, previously we also owned these, which these are, I've sold all these since then. All of those turned out really well, except for Comcast, which I think may have had a modest gain when I actually sold it. So these are still tracking kind of in real time. But overall, the buys that we had early on performed really well. I think Dino and Valero were doubles. Allstate and Principal were decent gainers when we sold them. And then PBCT got bought out for 24%, like right after I made the video for it. So overall, really good returns on the ones that I've sold. They aren't included up here with the ones that we still own. Overall, we've matched the S&P 500 basically. But if we look at some of the ones that have underperformed, so Albemarle is like a lithium company, basically a lithium miner. And if you watch the video for that, I might have 2 videos now. I'm not sure. Because I might have done an update. Someone asked me. But I said when we bought this that it could definitely go down into the 50s if it was a deep drawdown. So we paid, I think 117 was actually the price I said to buy, but this is the date the video came out. And so now it's at 93. So it's kind of in the middle. It could still fall deeper. And if that happens, I would probably add more at that point. But right now it's still kind of in limbo. I want to say probably lithium. I thought I read that some production was being cut. That's usually what happens closer to the bottom of the cycle. Then if demand comes back, supply will be limited, and that's when the stocks recover. So even though this one's down, it's not unexpected that it could have gone down. And if you watch that video, I make that very clear. A couple of the others are the energy oil companies. So I had someone comment on this. I forget which one it was, but they were like, your video is just talking mostly about portfolio strategy and for these oil stocks, and that was very true. That's exactly right. So today, I think Iran is, as I sit here, I think they're launching missiles at Israel. And my point with these was, if there's an oil price spike for some reason, then these can serve as a very good balance in your portfolio. Now, oil has pretty much only gone down since I posted these videos. I bought both of them at the very beginning of the year, but I didn't make the Devon video until it looks like April here. So this is based on when the videos came out. But today they're up a couple percentage each. And so if we do get that kind of oil price spike, a lot of these other stocks are going to fall and these are going to rise. And that's going to help kind of keep the balance in the portfolio. Neither one of them were near a cyclical bottom. So I made that pretty clear in my video. I also thought that Oxy was a little more desirable because Warren Buffett probably will put some sort of bottom under it. If it gets cheap enough, he'll probably buy more. So it's less likely that it falls super deeply, and it had a little bit more of a cushion. And that is actually playing out in the stock prices so far. So we'll see what happens. These could definitely rise if oil prices spike, and that will help kind of cushion the blow for the rest of the portfolio, which is really what those videos were about, which is interesting that was kind of the complaint, because honestly, if you're treating like a Devon as a cyclical, you needed to wait for it to get lower. It's not even down to the point where I would buy it as a cyclical yet. It's more of a portfolio balancing type of situation. Some of the others, I did do a video to kind of show people what my growth strategy looked like a little bit, because I don't talk about it on the channel very much with Mercado Libre. It's up 26% since then. Norwegian Cruise Lines was kind of this cyclical play, potentially on a recovery in cruise lines. I used Royal Caribbean as an example of what could happen and why, I thought it was a decent risk reward. It's up 22% since May. PayPal last year, we're getting close to the 1-year anniversary on that. It's up 25%, so that's really good. And then these other ones are older. I recently made a video, I think, on Elevance and Cigna. Did I make the Cigna one? Yeah. So I recently made new videos on these two. I wasn't really putting out too many videos in 2022, but I did put one out on Cigna. And it's up 50%. And then Meta, I held through the decline, and it's up 122%. I think it will be susceptible to a recession if we have one, but they were able to cut a lot of costs, and they came back a lot more quickly than I thought they would. I want to say at one point I was down 60% on this one, but they did the cost cutting, and then we had the AI boom, and people decided they liked Meta again, and the earnings rose too. But I do think they could still be cyclical in a recession. So, but I committed to holding it long term. So this isn't just a buy and hold for me, and it's working out. So I think that covers most of them. Pfizer, still trying to find its way, but the dividend is kind of helping it along, and we'll see what happens. But I mean, if let's just say it ends up 15% here in a couple months after a year, that's a totally acceptable return. That includes the dividend. So overall, the individual picks are, and there's not a ton of them here, to kind of get a fully balanced portfolio because it just kind of takes time. And most of my picks have kind of been in the growth area, which I don't usually make videos on. I think Mercado Libre is the only one I really made a video about growth, like pure growth. First Solar was kind of an oddball pick. It's doing okay. I still think it's interesting. It's an interesting pick at $220 per share. So if it falls that low again, I actually made this video. I put it out later. I put it out on July 4th. I had made it earlier for like the full Cyclical Investors Club. My buy price, the price was a little bit higher. My buy price was $220. So there's one trading day in between there, and there was a long weekend. So I picked the next day because it was closer to the actual buy price. But yeah, 220 is kind of where I think that First Solar looks interesting. And then the latest one is, Dollar General, just picked last month. So that's how everything's shaping up. I think that's pretty good for all these are in the S&P 500, I think, except for Mercado Libre. So these are all like well-known, S&P 500 stocks. And so there's not anything super like I said, most of my stocks lately have been smaller growth stocks, and then you need to join the service in order to get access to those ideas. But I think overall the methods kind of come through here, especially when you take into consideration the sell ideas, the avoid ideas, and then the buy ideas. And then these don't include all the winners here, right? Which improved by, if I still held on to all those, they would be up 22%. So we've taken profits in those, and that's not included in the numbers here. So we're definitely overall performing better than the S&P 500. But these recent ones are performing about the same, the ones that I'm still holding. All right, hopefully that gives everyone an idea what's going on in the CIC this quarter, what's going to be going on over on Patreon with the new picks each week. And those picks will cover all of my strategies too, not just the ones I share on YouTube. So you'll get, I won't have like full access to like all the spreadsheets like in the full Cyclical Investors Club service, but I will be using all those strategies and sharing the strategies with each pick as I explain why I think they're a buy. If you have any questions, let me know in the comments, and I'll see everybody later.